Monaco 64, home of alternative economics and contrarian views. Well, today I have the pleasure of speaking with Mark O'Byrne. Mark founded, the biggest bullion dealer in Ireland back in 2003 called GoldCore. He sold it on in 2020, and now he's the owner of Tara Coins, taracoins.com. And I spoke to Mark back in October 2023. And at the time, gold was below 2000. And like me, he uh, he expected the fiat currencies, not just the dollar, to keep devaluing versus gold. And here we are, 2.5 years later almost, and gold is near 5,000. Mark, welcome back. And how are you
Thanks for
doing?
having me on again, and really appreciate the work you're doing. You do a great job of keeping us all informed as to what's happening in these markets because it's very, very volatile, as you know, and there's a lot of daily action. But it's great that you're helping people understand the importance of keeping a long-term view. So yeah, thank you.
You're welcome. So maybe you could talk a little bit about your background, how you got into precious metals, how you decided to create GoldCore, and then how you've moved on to another, enterprise now called Tara Coins, and I'm going to bring up the website too.
Oh, you're very good. Thank you, Mario. Yeah, so my background, I actually studied history in University College Dublin. So I have a BA in history. I studied Greek and Roman civilization. I studied archaeology. And yeah, I found it absolutely fascinating, particularly the rise and fall of empires, because you see that very clearly, obviously, the Greek Empire and the Roman Empire. And I was always, as a kid, sort of a doubting Thomas. I was always asking questions and trying to understand things. And because none of it made sense to me, a lot of the sort of simplistic history that we were taught. So I was trying to understand, well, what's really happening here? What's driving this, you know? And I started to realize, well, gold, silver, land, resources were a big driving factor, obviously, of and the motivation of the kings and queens and the emperors throughout history. So yeah, I became aware of that, and I sort of yeah went away from it. My dad offered me a job in his business with an employment agency. I did that for a little while, didn't find it very rewarding. But I started buying gold and silver in a private capacity soon after. The Y2K thing was interesting and had me wondering, you know, are there other risks, tech risks, and other risks posed to the banking system? Because there's a lot of scaremongering about that Y2K. I don't know if you remember in 1999. So the internet was in its infancy, and yeah, there was scaremongering that the ATMs were going to work, you know. So I started looking at gold and silver, and then September 11th happened, and when that happened, I said, right, it's time to start buying. So I started buying gold and silver in a private capacity. And interestingly, it was known in Ireland selling gold or silver. I couldn't believe it, you know. And I spoke to friends of mine who worked in finance, and they all laughed at me. They literally laughed at me and said, what do you do? And that's a barbaric relic. Why don't you buy property or blue chip Irish shares like, you know, Bank of Ireland, AIB, which subsequently collapsed in price, you know. So it was interesting. I knew a little bit about investing, both the fundamental side of investing and long-term returns, which you tend to get generated from the different assets. And I started educating myself about technical analysis as well. And when I looked at the charts, obviously it was an absolute no-brainer, you know. So long story short, I said, right, there's an opportunity here to set up a company that actually sells gold coins, gold bars. So I set that up in 2003. And as you said, we became the largest gold broker in Ireland. We had, and myself and my business partner grew it over the years. And we had basically, yeah, €1 billion in turnover by the time I left in 2020. Million in bullion stored for our clients, fully segregated, fully allocated, the way that bullion should be owned. If you don't take possession of it, it has to be fully segregated, fully allocated, and in your name. Because yeah, the ETFs, we might talk about that briefly. So the risk involved in ETFs and these other sort of digital forms of gold and silver. So yeah, so there's 200 million assets under management, €1 billion of turnover, and it's great because now that money of the gold and silver is money, so it has been revalued by three, four, five times. So it's great. There's a lot of people, like we had about 20,000 clients. So a lot of people have done very, very well, and they've protected their wealth. So, but it was hard. It was much harder than I thought it would be because I thought the penny would drop when the financial crisis happened. I was warning about the financial crisis that was coming in 2005, 6, 7. I was writing a daily market update every single day to warn people that a financial crisis was coming and they need to diversify and own physical gold and silver. And I was just shocked at how the media was covering it, especially the Financial Times. And I realized that a lot of the local media and national media would follow the Financial Times. So the business editors in local newspapers and national newspapers would follow the lead of the Financial Times. And the Financial Times was telling them these things were volatile, particularly silver, but gold as well, So I could see how they were, and you've done a little bit of this as well, obviously, in terms of the Financial Times and how it can be twisting things. And then people think, oh, this is risky because the experts are saying this is risky. So I realized there's a lot of narratives around gold and silver, and that's why I spent a lot of time actually, doing the education piece as you're doing now, So yeah, so that was GoldCore, and yeah, but basically I had a lot of Irish people coming to me saying, why are we buying gold coins with kings' heads on them or queens' heads on them, and Irish Americans in particular actually would be saying, well, why are we buying British coins, American coins, South African coins, Australian coins? Why aren't there Irish coins, So I used to get onto the central bank and say, we should do a legal tender Irish coin, same way the Austrians have the Philharmonic, But yeah, it never really got anywhere, and I never got clear why that was. But any long story short, in 2023, I decided to do it myself. So we minted the first Irish bullion non-legal tender coins. So they're coins, they're beautiful sovereign coins that have the sacred symbols of Ireland on them, but they're non-legal tender. So they don't have a fiat denomination on them. They don't have a euro, dollar, pound denomination on them. So people are buying them for their intrinsic value and for their beauty as well. So yeah, it's gone very well. I see you had Stefan Gleason from Money Metals Exchange on the other day. So they're our biggest distributor. Basically, we mint the coins. We outsource the minting to mints in Germany and mints in the US because I want to have minting and distribution, wholesale distribution in the EU and the US because unfortunately I do believe these trade wars are going to escalate, and I do believe we will see more tariffs and more issues in that regard. So I want to have that minting distribution in different countries. So yeah, so they're being minted in the US, minting in the EU. Metals Exchange are actually one of the biggest distributors I have in the US. So, and they're a very, very good partner because
Yeah,
they understand precious metals as sound money, and I have conversations with many of the other. I'm wholesaling basically, so I don't sell directly to the public. I sell to the larger retailers.
I see. And I see
Yeah,
you've got a tenth of an ounce uh, a round. I guess you call it a round. It's not a coin if it's not.
exactly. It's a round or a medal or a non-legal
Yeah,
tender coin.
yeah. So
Yeah,
that's
yeah.
pretty interesting. A tenth of an ounce.
It
It's
is, yeah, and I
affordable.
did that for a reason because I actually started with silver in 2023 because I believe silver was, like yourself, fundamentally undervalued, and it
Yeah,
clearly was, obviously, when you look at the gold silver ratio. And then I did the tenth of an ounce gold because I believe that gold, like yourself, is going to go much, much higher. Not that it's going higher, it's the dollar and the euro and the pound and the fiat currency is being devalued. And then I did the 1 gram gold because I think 1 gram gold is going to become very, very interesting when gold goes to 20,000 plus. And I don't like making predictions, but so I'm not making that prediction, even though I just said that. But I do genuinely believe the dollar is going to be devalued to 20,000 of an ounce. It used to be 1/20th of an ounce. And this is the key thing that people need to understand. I think many of your viewers do understand it. But we need to start pricing things in weights, honest weights and measures, not in fiat digits on a screen. So yeah, obviously £1 used to be one gold sovereign.
yeah.
Then the
It still
$20.
is legally.
Yeah, yeah, yeah,
Yeah,
yeah,
the
yeah.
sovereign
Yeah.
is still a pound. I mean, yeah, it's technically it's a pound. I think it's been since 1837.
Is
Um,
it? Yeah, yeah, yeah. Sound as a pound. Well, it's no longer sterling is no longer sound as a pound because obviously it's paper, and paper is for paupers, and
yeah,
that's not natural law. So, and now paper, at least with paper, that there was, you'd have to chop down trees and you'd have to get the paper and you'd have to get the ink. Whereas now, obviously, they're just going keyboards, and they're trying to move to this sort of quantum digital system, which is, just they go on keyboards and create, hundreds of millions, So, and it's very dangerous, but people should think in ounce terms. And as you know, 1 ounce used to be a $20 gold piece. So with $1, you're buying 1/20th of an ounce. So in recent days, we saw that people can get much more value. They were buying with $1, 5,500 of an ounce, and now they're buying 4,800 an ounce, something like that, you know. And I think the more people look at it in ounce terms rather than because the volatility, as you know, is it's already gone off. It's gone off the charts, but it's going to go even more off the charts, you know. So I think you just fade out because people get sticker shock. Like I get sticker shock, and I've been expecting this for a long time. But when I see this gold and silver price up 300, 400, $500, like I'm expecting it, but it's still you still sort of go wow. So I because of the scale of it in dollar fiat terms. So I think it's important to keep an eye on the percentage terms, and then to realize, you know, you and many of your excellent guests come on. They always encourage people to take a long-term view, cost average. And I think that is the most important thing that people, you know, have a very strong high allocations to physical gold and silver. And then, you know, if you're over allocated, you just hold your position, you take a long-term view, and occasionally you might sell a small amount if you've got some costs that you need to take care of, you know. But in general, yeah, cost averaging, if people haven't got a position, that this is an important thing to realize that they need to get it's called geometric cost averaging, whereby if you're very exposed if you don't have any precious metals at all. So for any so-called newbies, or you know, people who have never bought gold here before, you know, decide how much of your net worth you're going to put into gold, and then get that initial allocation, and say you decide you're going to put, say, let's just say 20,000 you're going to put into gold. So rather than dollar cost averaging over the next few months at 5,000 a month for 4 months, you would put, say, 10,000 in pretty much straight away, and then cost average the rest, you know, because the scale of risk in the world is so high today that people really need to just take the medium and long term view, forget about the short term, because as we know, it is hugely volatile, and it will become more volatile. And that's partly the nature of markets. When you have massive supply demand for a small physical market like the gold and silver market. So it's partly the nature of free markets, but it's also, as we know, there is manipulation and there's concentrated short selling. And I think they're going to try and make it as volatile as possible in order to put the man and the woman off of the street, put them off precious metals completely, you know. And they're already, Financial Times last week was comparing gold and silver to meme stocks, you know, which is pretty outrageous.
I saw that. Yeah, I saw that today. The meme or meme stocks. I would say, Mark, that it's more the currencies that are dropping so quickly, and that's
Exactly.
what makes gold and silver. Because there's a rush. Big institutions, central banks, sovereign wealth funds, they're rushing out of treasuries and other government bonds, and rushing into to gold and silver, and it's like putting the Niagara Falls through a hose pipe. I
That's yeah,
think
exactly it. Yeah, and
FT always gets it upside down.
it does, it does. Yeah, it's incredible that they completely ignore the fundamentals of the supply and demand. I mean, how can you cover any market and focus solely on the speculative element? And there is a small speculative element, but that speculative element is primarily bullion banks who have massive concentrated short positions who want to get out of those concentrated short positions. You know, I mean, most of the bullion dealers I've spoken in recent days, there was a lot of buying, and there is some new entrants into the marketplace, but there's no sort of mass awakening. There's no sort of run on banks. It's, you know, as Stefan said the other day, we've gone from, say, 1% of the retail public owning any gold whatsoever. If even that, I think it might be 1% in America, but I would say in the UK and Ireland it's probably, because they do have a hard money, sound money tradition in the US, much more so than we do in the UK and Ireland and some of the European countries. The Germans would have it more obviously as well. But in our country, I think the UK and Ireland, it might have gone from 0.5% to 1% in the last, you know, year or 2 years, you know. So it's going from a very small base. And a lot of the bullion dealers, they're very small companies with only a handful of employees, you know. So logistically, they actually struggle to keep up with demand. So yeah, they're run off their feet. And you know, they're gone from, you know, 20 trades a day to 50 trades a day or 60 trades a day. But it's still very, very small compared to the amount of money that's being invested in, say, the stock market every day, or bonds, or indeed property markets. You know, if you were to compare the volumes in terms of pounds, euros, and dollars. So it shows to me, I think that's a very important metric, is how many people own gold. And we're only going to have, you know, I think believe we'll only be at the end of this cycle. It's, you know, it's not a bull market per se, because it's actually just a devaluation of the dollar. and the dollar losing its reserve currency status. So it's only when that happens that we will see the reset, and we will see the dollar, euro, pound price of these metals bottom out in effect, you know. So it's good to invert, always invert, and look at the chart. When you see the chart going up, it's actually, you know, as you said before, it's the dollar, the euro, the pound going down. So, and then I think that's when the mandatory, we will probably see 15-20% of people in the Western world will be owning precious metals. And it's probably that amount and much more in China and India now. You know, I think we're slow learners. We're only slowly realizing what the Asians have known. They know that in their DNA and in their souls, you know, and whereas we have been conditioned and indoctrinated over the years to see gold and silver as jewelry, as a barbaric relic from the past, you know, all these negative associations.
Yeah.
When in truth, it is the most superior form of sound money in the world. And
Yeah.
it's, yeah,
Risky and volatile. I mean, I've had many people, friends, and ask in the past, "Oh, should I buy gold?" I said yes. You know, this was 5, 6, 7 years ago, and they never did because they always said, "Oh, it's too risky anyway. I'm not going to do it." You mentioned 1999, the Y2K. I remember that. Yeah, people were talking about the risk. And then you had, of course, 9/11, and that's when you started buying gold. I started buying gold maybe a year later. And then you said you saw that crisis coming and in '08. Yeah, a lot of people did. Quite a few people did. Some people say, oh, nobody saw it, but we could see that. I mean, I could see it coming too. I could see it, especially here in the UK, the fact that the government under Gordon Brown as chancellor, they were deficit spending, they were like growing the welfare state, and I knew it would end in tears. And then in Ireland as well, and other European countries, you had the sovereign debt crisis in 2011, 2012. And you said that your friend said, "Oh, you should invest in the Bank of Ireland and so on." But I remember, Mark, that during that sovereign debt crisis, the pigs they called them,
yeah,
Portugal, Ireland, Italy, Greece, and Spain, that the only solvent bank in Ireland at the time was Paddy Power, the betting company, right? So
yeah.
are the Irish have why do you think they haven't woken up to the fact that the system is not fit for purpose? And why do you think only 1% of the Irish participate in gold or silver? I guess it's the same thing to do. It's the same thing, similar to what it is everywhere else, right?
Yeah.
The financial, let's say, class and the press, they keep people in the dark.
Yeah, no, it is. It's like I don't like using the word propaganda. It's a strong word, but it is. There is a lot of propaganda against gold and silver, you know, and it doesn't get covered. I mean, it's amazing how gold and silver wasn't covered in the last year. You know, it was a top performing asset. At the end of the year, FT, a lot of these financial publications barely covered the fact that it had, both of them had huge, massive performance, best performance in many years in 2025. And it was only FT only put gold and silver on the front page of the Financial Times, I think there on Saturday, after the price had fallen very sharply, you know. So whenever there's volatility or anything negative about gold, they prominently feature that, you know. Whereas when there's any, they actually don't do rigorous analysis, and that's part of the problem, because if you do any sort of analysis of it and you look at the long-term returns, I did a report recently which looked at the gold performance in euro terms, because we all tend to focus on gold in dollar terms, but it's important people think in local currency terms. And I've done one for sterling as well, which I'm going to publish now in the next few days. So gold price in euros, it's been absolutely extraordinary returns. And this isn't being reported in the Financial Times, which is very pro the euro, obviously. So, you know, basically the euro, since the euro's introduction in 1999, gold came onto the market. It was 245 euros per ounce in 1999 when the euro was first launched, you know. So you could buy €1 could buy 1/245th of an ounce. And now today we're about 4,200 euros per ounce. So you could buy, you know, €1 could buy 4,200 of an ounce. So it's actually appreciated something like 1,600% in the 26 years. and that's equivalent to an annual return of 11.2%. So it's massively outperformed the S&P 500. But the media, the financial experts, the business editors, the economic editors, the good journalists, journalism has really it's declined obviously massively in recent years. A lot of the good people have gotten out, and they have a lot of younger people who don't really know a huge amount about a whole lot, and it's become very obviously targeted on clickbait, and there isn't any sort of investigative journalism. Isn't any just rigorous journalism in general. So those returns, I mean, that basically means that the euro has lost 94.3% of its purchasing power against gold. I mean, this is huge, because at one stage, and what's huge about it is at one stage the euro was being touted as the next reserve currency that was going to compete with the dollar. So they don't want to admit this, because if they admitted this, then it would lead to questions about the wider monetary system and fiat currency system. And obviously, in the UK, it's a similar thing in the UK, and Gordon Brown and Tony Blair were trying to get sterling into the eurozone. And I think that's part of the reason that they sold the gold reserves at the bottom of the marketplace in the late 1990s. And Gordon Brown and the Browns bottom, I mean, it was outrageous what happened there. So they wanted to transition to the euro, because the euro was going to be this wonderful, common currency, global reserve currency, and it's turned out to be anything but that, and it's turned out to be, people are losing a huge amount of money, and it's also contributing to bubbles in housing markets around the eurozone, and obviously we've bubbles in most of the big cities around the world, which is based on debt. It's based on a giant Ponzi. And the scale of debt in the eurozone it's huge. And back then in Ireland, the debt was mostly in the private sector, and on the lending side with banks and with mortgages. Whereas now, the government has huge debt, and it's the same globally. Look at the US, look at the whole world. It's the private sector and the banks had the debt back in 2007, 2008, and now it's both sides of the balance sheet, both the public sector and the private sector, and the global GDP is just it's incredible. Like it's over 300%. So people need to understand. So global debt now is over 300 trillion, and global GDP, so gross domestic product, which is the measure of it's the value of every single good, every single service that is traded amongst every single person, company, bank, government on the planet. That is 100 trillion a year, and the debt is now over 300 trillion a year. So, I mean, this is just
It's
an excellent way
it's
to have it.
even, sorry to interrupt you, it's even more than Japan, because Japan is about 250%.
Yeah, yeah. And the Japanese bond market is blowing up as we speak. So it's only a matter of time before all these bond markets blow up.
Yeah, I mean, we've recently heard that Trump is nominated Kevin Warsh as the next Fed chairman, and there's a lot of silly analysis, in my opinion, to the effect that Warsh is going to be the next Paul Volcker. He's going to rein in the balance sheet. I mean, don't you think that's impossible? What you've just said there about the debt, the mortgages, financialization, the only way to keep going is in this system, is to continue the debt bubble, because if you stop it, it all comes tumbling down. And some people might think, well, that would be negative for gold and silver, but I don't think it would. Maybe you could touch upon that.
No, I agree with you. It's again, it's more sort of a psyop propaganda. And it's a sign of desperation, because I think they leaked, so some leaked there late Thursday, Friday, and they're trying to suggest that, oh, somehow this guy, he's going to be almost like a sound money guy who's going to really protect the dollar, and therefore, this could lead to dollar strength. But it doesn't make any sense whatsoever, because the fundamentals drive. See, this is the narrative they've created for years, that the central banks are all powerful masters of the universe. It's like a cult. It really is. It's like a religious cult where everyone bows down to the Federal Reserve, the board minutes. Like it's like reading the tea leaves. What are they going to say? And what signals are they giving? As if they manage the economy like, as if they manage the currency, and the currency is based on supply and demand. And China is America's biggest creditor, and they are very clearly strategic competitors now. And the Chinese and all their adversaries are selling US dollar denominated debt in terms of US treasuries. And we're very clearly seeing that. And we've now seen US treasuries are now worth globally, are now worth less than global gold reserves, you know. So this is what's really is happening. And the FT and the financial publications and mainstream media is not covering any of this, you know. So they've lost control of their narratives. People don't really trust the Federal Reserve. They don't trust the politicians or the central bankers. I think they're losing control completely, and their narrative is being lost. So this looked like a really desperate last gasp attempts to sort of reassert. I suppose they're going to, obviously Powell is moving out, so they're definitely going to try and create trust in the new Federal Reserve chairman. And I think this was the first attempt to do that, you know. But I think they're going to fail miserably because ultimately, you know, it's not just their strategic adversaries like China who are selling their bonds. It's also their allies like Japan, you know. So the dollar is very, very vulnerable, and they can talk. A lot of it is they use a lot of talk, a lot of propaganda to manipulate prices and to try and create trust in the dollar and in the wider financial and monetary system. But it's a giant Ponzi. It's as simple as that, you know. The numbers clearly tell us it's a giant Ponzi, and no one's talking about the global debt to
Yeah,
GDP ratio.
no, no.
Yeah.
And so, I mean, I guess we're going to continue down this road, and the fact that very few people are talking about all the problems, and that they're not covering or talking about the fact that gold and silver have been the best place to be really since the beginning of the century. To me, it tells me that they're going to keep trying to kick the can down the road, and that you know you would be silly, in my opinion, and this is not advice, financial advice or investment advice, but getting rid of your gold and silver now just because it's gone up, yeah, I don't think is the right thing. And so, Mark, could you give us your opinion on that, and then also some, yeah, what you think people should be doing and what they should be looking at, and how much longer do you think this is going to keep going, and where it could lead to? Do you see hyperinflation, or maybe they'll eventually let it all collapse?
Well, where do we begin with that? What should they be doing? Well, they should, as you've been encouraging people, to just really take a long-term view, try and avoid the trading of these things because the volatility is going to get worse and worse and worse. And I've seen a lot of people lose a lot of money, you know, even if you get the trend right, you know, if you're using leverage of any form, they run the casino. So you're playing in the casino if you play that game. So when you buy gold and silver coins, you're taking your chips out of this very corrupt casino, you know. So I think that's the primary thing is, you know, be diversified, have very strong, healthy allocations to physical gold and silver. That's my belief. It's not financial advice. Obviously, I don't give financial advice. I'm not a financial advisor. But physical gold and silver aren't actually regulated, which is interesting of itself. They are like property or like foreign exchange because they are forms of money. But this is what I have been telling, you know, telling people and friends and family to do for years. And so, yeah, so diversify, have healthy allocations of physical gold and silver, take possession of it if you feel secure in your own home. Some people don't. If you don't, then you put it in a safety deposit box of a very secure provider. Don't put it into banks ever. And
Nor the Royal Mint.
No, no, exactly. Any government or private bank is not a good idea. So there are very good storage providers around the world. I've actually launched storage for people who want to store in Switzerland, and we've just launched that recently because I do believe Switzerland is the safest jurisdiction to own gold. And that's backed for a whole host of different reasons. But I think you know that as well from spending time there. It just works because it's probably the least corrupt country in the world. They have the cantons, so they have a decentralized government. They don't have an all-powerful federal government, and it's not perfect, but it's more perfect than most countries in the world. Let's put it that way. So, and plus, in terms of liquidity, which is a very important consideration, Obviously, the three biggest refineries in the world are in Switzerland, so there is huge liquidity in Switzerland, and I do think it is a safe haven from a geographic point of view. But it sort of depends where you live as well. I mean, I think it's important for people to try and take possession if they can. If they don't feel comfortable doing that, then have some in country, because we saw with lockdowns, planes weren't flying. There's certain worst case scenarios. If we get a world war, I mean, we're not even talking about, you're very good at talking about these things, but it's amazing how the media, like Ukraine, Iran, the level of geopolitical risk in the world today is just, it's like 1939 type of thing, and no one's, people are not joining the dots with gold and silver, and instead they focus solely on the speculators, and meanwhile, there's massive macroeconomic risk, geopolitical risk, systemic risk, and monetary risk. These are the four sort of really big risks and different prisms that you can look at the gold and silver market. So it makes sense to have your gold and silver in your country. So if you're an American, you had Stefan on the other day. There's a few very good states in America, very conservative states. Idaho is a good place to store. Wyoming is a good place to store. Texas is probably fairly good as well. So have some in possession, have some in country, and then for larger amounts. I think Switzerland is a very good place for people to have it in terms of liquidity. And yeah. Yeah, I think that's very important that you do have it in country, whereby you can go and get it in certain scenarios. Because in certain scenarios you may have to go and get it. In certain worst case scenarios. So and then Switzerland for European people, for a lot of your followers are obviously most of them are in the US, but some in the UK. And in Ireland and Europeans, like Switzerland is very close to us. We can fly there quite easily, and you can get a boat and you can drive there. So that, I think that diversification is important. So in terms of the balanced portfolio is nonsense. That 60-40 thing, as we know, because 40% the bonds are likely to become worth a lot less. So I think we need to think more in terms of, rather than asset allocation, think about geographical diversification, and then diversification within the precious metals portfolio itself have some. Well, the key thing is getting the right ratio between gold and silver, and I've long been telling people to have much higher allocations to silver than other people would have said, because I genuinely felt that people should have 50-50. So, but in GoldCore, I didn't go quite that far. But I was telling people, 66%, 34% gold and silver, and have good, strong, healthy allocations to silver. I think right now, you could easily go 50-50. I know silver has appreciated a lot. I know the gold silver ratios come down, but I do think it will come down to as low as 10-1, and maybe even lower. So yeah, 50-50 is good. And you have a mix of different products, and yeah, and then once you've done that, you just sort of, I think it's important. There's a lot of stress and fear is the one thing that really makes people make mistakes, obviously greed and fear. So, you're in a good position once you've done that. So try tune out the daily noise. Don't be looking at it all day, every day, because you just, yeah, you'll get sucked into, trading, and you just have to, take a minimum 3 or 5 year view. And I don't think I think everyone will be very, very happy. And it could be a 10-20 year view. This is a really big, it's not, it's not cyclical. It's structural, and it's a massive, we're in the fourth turning, this is end of empire stuff, so,
Yeah,
having that long-term historic perspective is very important.
I agree. And yeah, so do they charge VAT in Ireland for silver or?
They do, unfortunately, yeah. And
Yeah,
they
yeah.
charge VAT on gold since the foundation of the state in 1922. Yeah, you
Oh,
asked me about Ireland before. That's part of the reason that we love property. We're absolutely mad for property and buying houses and buying
oh, I
apartments.
see. But also
Yeah.
there's VAT on gold as well, is there?
No, there was
No.
VAT in gold from 1922 when we got independence from the empire. But in 1999, the EU brought in a thing called the EU Gold Directive, which harmonized the treatment of gold.
Oh yeah, I think in the UK they also stopped the VAT on gold in 1999, like the
That's right.
EU.
Yeah. It
Yeah,
was a good thing, and it was
yeah,
very interesting, that EU Gold Directive. That was actually one of the things that made me very positively disposed towards gold, because
yeah.
because the EU, they actually said it, that they were actually encouraging the citizens to own investment grade gold, you know.
Yeah.
So
Well,
there are
Mark,
just
yeah, sorry to interrupt you. So
no
what do you
problem.
think what's I know it's difficult to forecast what's going to happen, but what do you see going forward from I mean from the monetary leaders, well, if you want to call them leaders and our politicians, do you think they're just going to try I think they're just going to try to keep this thing going and it's not going to end well. So
I
maybe
agree. Yeah, and
yeah.
unfortunately, I think they are going to. You know, it's Gerald Salente is a guy who I interviewed. I used to interview quite a few people like yourself, and learned a lot from lots of wonderful guests. And Gerald Salente is the guy who says, "When all else fails, they take it to war." And
Yeah.
unfortunately, I think that becomes the major distraction, and then it
Yeah.
becomes a justification
Yeah.
for creating more money. And
Do you still interview people, or was that when you had GoldCore and you had a did you have a
yeah,
YouTube
exactly.
channel?
That's what I GoldCore.
Oh,
Yeah,
that's
I don't know. No, I don't.
yeah.
Yeah,
Okay.
but I enjoy being interviewed by people like yourself.
Yeah. And I
So
remember back even before I started this channel when I was still working in the city, I would see you sometimes on Bloomberg TV talking about gold.
yeah, I
So
managed to because
you've been
I
around for a while.
yeah, yeah, I have. Yeah, and we managed. We were very rigorous on the research. It was always very evidence-based, very fact-based,
Mm.
and we were very balanced. And we were saying to people back then, we were saying, you know, put 10% of your portfolio
Yeah.
into gold.
Yeah.
So, and we knew if we said more, we wouldn't be allowed to get into the mainstream media. We would be
Yeah.
banned completely. So I had to be quite tactical and quite strategic in the communications. And I
Yeah.
couldn't say it was money as well. I had to say it was an investment, which is
A commodity.
yeah, yeah,
Well, it
exactly.
is a monetary commodity, but
Yeah, just one thing. Like again, I
yeah,
don't like making predictions, but I do think I think we will be shocked. Even people like me and you. It's recently I've sort of started saying, well, okay, how high? And it's as you know, it's how low can the dollar go? And I think the whole Bitcoin Ponzi is looks like it's in big trouble. And then the wider, you know, Ethereum, all the rest of these cryptocurrencies, you know, and I think that they a lot of money has flown into gold and silver from them in recent weeks. I think the writing is on the wall for those cryptocurrencies. So if Bitcoin can go to $100,000, there's no reason why an ounce of gold can't go to $100,000. If the US is bankrupt, which it is, you
yeah.
know.
Well,
So,
even silver, I would say, if Bitcoin can go to 100,000, why can't silver? I mean, I
yeah,
remember when Bitcoin was trading at $100. I mean, I actually used to trade it back in 2012, 2013.
yeah.
So, anyway, Mark, could you tell the viewers where they can find you online?
Yeah, they can find me on taracoins.com. We're doing more and more updates now. We've done interesting reports on gold recently in euros, and now one gold in pounds. And I also do things in the long term. I think it's very important to get the long term perspective that gold and silver are money throughout history, you know, ancient history,
Yeah.
in the Bible. I mean, we're in a these are biblical times, Mario, and in the Bible, the gold and silver are mentioned 737 times in the Bible, and frequently in terms of being honest weights and measures, you know, it's frequently about their values for creating abundance for people, you know. So, and
Yeah.
it's not just in Christianity. It's in Judaism. It's in Buddhism. It's in Hinduism. Like all cultures throughout history, and all spiritual traditions throughout history have a reverence for precious metals, and they saw them as sacred metals from the sun, the moon, the stars, from the universe, universal metals, you know. So,
Yeah.
yeah, so I'm beginning to focus on that because I think there's so much division in the world. I want people to realize, you know, that you know we need to come together and just stop the division, you know. And so yeah, it's there's good content I'm putting there on the newsletter page, and yeah, and sorry, on LinkedIn as well, and
Yeah.
on x.com as well. That's where you can find me. And my
Yeah.
email is mark@taracoins.com. And yeah, yeah, again, really appreciate the work you're doing, Mario.
Thank-
It's important work you're doing. And a lot of people are going to be, you know, they're going to protect their hard-earned savings, and they're going to grow them very significantly as well. So well done.
Well, thank you, Mark. And I'll put all the details of where people can find you below in the description of this video. And yeah, all the best, and hopefully we'll talk soon.
Thank you, Mario. Yeah, all the best to you. Take care.
Thank you. Bye.